Hey guys, welcome back to the After Hours. I'm the 8-Tailed Beast, and today we're going to talk about the line between the 90% and the 10%. So let's get into it. Pay attention, because even I failed to recognize the value inside my notes the first time. Be honest, in 5 to 20 years, will you regret trading for your company? Well, it probably depends on how good you are at your job. In trading, all the work and responsibility is on the trader. It's said the best traders are born on Wall Street. Wall Street consists of the largest stock exchanges, the largest financial firms, and employs thousands of people as the trading hub of the world's biggest economy. In reality, is less than a mile of financial institutions in Manhattan, New York. The modern use of the term Wall Street refers to the umbrella term for the U.S. investment and financial industry. The perception of what it is and what it takes depends on who you ask. There's a lot of criticism about Wall Street. Let's list a few. Some say they encourage excessive risk-taking. There's too many unnecessary middlemen. They use taxpayer money to bail them out. These are the opinion of people not on Wall Street. If you look at some of the most controversial theories on Wall Street, the two largest factions are split along theoretical lines. One supports the efficient market theory, and the other side believes the market can be beaten. Every theory, in general, is an attempt to impose some type of consistency or frame the millions of orders that make up the daily market. However, in the financial world, change is the only constant. There are several theories looking to explain or influence the market, as well as the actions of investors in the market. Most likely, it all works on a random cycle. During certain time periods, one theory beats the rest and sets the stage for market conditions. I asked my buddy Steven Dux, one of the tigers of Wall Street, for advice. How hard is trading? You know what he did? He stopped what he was doing. He took a deep breath, and he led me to the couch. He said, I love trading. I love everything about trading, and I have faith in myself. But the reason I can keep moving forward is because I have people that believe in me. Just like how I was able to come this far because you believed in me, I believe in you this time. My heartstrings. I got you, bro. I got you. Then he told me a story. He told me that trading is like sailing a boat in Venice through a dark cave. There is a strong current inside, and your risk is hitting a wall. The only thing you have with you is a large oar. Use it wisely to guide you deeper into the cave. Eventually, your eyes will adjust to the dark. If you bide your time well, you'll see a light at the end of the tunnel. It's best to stay emotionally stable and aware of your surroundings. If you're not proactive or travel too fast, you may miss the chance to learn how to dodge the real dangers. After a few trips through the cave, you can make a map of the treasure. It was only later that I found out this was a clue on how to manage your mistakes properly. I translated it later into this. Trading in the present moment helps traders accept the uncertain reality in the market. Charts always reflect past thinking or expectations. That's why charts work sometimes. After breaking your ego, learning your edge, and committing to intelligent risk-taking, you put yourself in the best position to learn objectively from your mistakes. Managing money effectively starts with careful planning and the courage to try. Now, professional traders value staying consistent and profitable through risk profiles. Most people have an exploitable weakness in their cognitive bias and survival instincts. Remember, the 90% are barely conscious, undisciplined, and emotionally unstable. In return, you should learn fully conscious, keep as well as apply decent records with strong intentions to experience growth in the process. It is also important to remember that no unified theory can explain the financial world, which is why you have to safely expand your awareness of what the market is offering. Earl Nightingale said, "Intelligent risk takers have the greatest security." If you support the efficient market theory, you use technical indicators to trade along the trend. The theory assumes it would be impossible to outperform the market because all stocks trade at their fair value. This also assumes that all investors interpret available information the same way, which is something that even robots don't do. If you believe the market can be beaten, there are several ways to go about it, but ultimately, most of your work will be done in your stats, testing ideal outcomes against the reality, then applying results of your thesis to the long term. Other theories do not rely on rational factors or market efficiency, but instead on human psychology and emotion, especially economic theories. The two most popular ways both assume the market is rigged. You can either follow the inside traders or test your luck chasing windfall profits. In every case, you'll have to learn how to manage your risk and leverage profits because the odds are against you in the long run. Annually, roughly 90% of traders lose on the year. Let's start with the winning 10% of traders. I learned professional traders work from a clear sense of priority. The 10% are typically specialists that have gone through strict training. The conditioning process for trading reminds me of sports conditioning. In trading, you just do the sets and reps mentally. The pros, they find an edge and then they learn from their mistakes around it. It's a lot easier said than done. Ask the losing 90% of traders that are too busy chasing quick profits. The professionals beat the efforts of the 90% through finding order in the chaos and randomness known as the market. Professionals in all fields usually do their job right because they have their job narrowed down to a science. They're committed to mastering their skills, because it's possible to experience exponential growth through proper trade selection. Having a trading plan lays the foundation to profit consistently, yet 90% of people still lose on the year. Let's talk about the 90%. And me. They believe every trade is all or nothing, and the only way to create success is through hope and perseverance. This group typically treats trading education like a huge test to be scored out of 100%. That's not a trader, that's a scholar. Retail traders usually blow up before they can find their pace. It's no surprise that the 90% have short attention spans and weak grips on reality. It's a side effect of the culture and lack of respect for discipline. If you need a good example, check out Stephen Dux's profit curve. It's pretty much his behavior chart. Stephen is a forever student to the principles of discipline and patience. Stephen would say, boring trading is good trading. These are a few of my favorite habits he has. One of Stephen's habits is to test the water, sometimes literally. I once asked Stephen, can you read the future? He looked at me crazy and said, you just have to win more than you lose, like it was obvious. He went on to tell me several metaphors for awareness in Chinese culture. I assumed he was using sarcasm to roast me into the fourth dimension. I mean, those insults take a while to sink in for some people. But that's all I got for you guys today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.